What a bloodbath in the stock market today, especially the high-tech stocks, but pretty much every sector of the market is getting hit, from crypto all the way to gold. Gold is down significantly, and it makes complete sense, and I will tell you why. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. The shocker around AI startup DeepSeek from China, man, it's running deep. It's hitting the high-tech stocks. It's hitting the popular high flyers. And it's hitting all the other sections of the markets as well. Makes sense, right? That crypto is down. If the high-tech stocks are down, okay. But gold also down significantly. Big sell-offs, basically all around the commodity market. That makes no sense. No, it makes complete sense. Let's jump right into the chart of gold. So, look at this. We went right to the all-time high. Didn't reach it 100%, makes complete sense. Then reversed, big sell-off today. I hope you use the area around the all-time high to take some profits, as I told you, because today's candle doesn't look very good, right? This is rough. Now, why is gold down if the markets are in turmoil and uncertainty is rising high? It's called leverage. So the reason why so many of the high-tech high flyers are down so significantly and the Nasdaq is down so much is that you have all these investors that are in the high-tech market, in the high-tech stocks, in the popular quantum computing stocks and the AI stocks and all these big stocks with leverage. And now they're all getting ringy. Here's the margin call. Pay up, sucker. It didn't work out for you. Click. And this is not only to retail investors. This is happening to hedge funds. This is happening to professionals all the time. That's why these sell-offs are so vicious, all right? They hit certain stop levels, and then the margins calls keep coming. And therefore, the investors sell off everything where they are up to cover the margin calls. Well, what has done exceptionally well in the past 2 weeks? Gold. And that's your correlation. That's the reason why gold is down now. So there's no fundamental reasons for this, right? Let me give you a look at the dollar real quick, and you can see the dollar is weaker. We made a lower intraday high, lower intraday low. Now, this is a candle right at the support zone. Okay, that's interesting. We might stabilize here, but there's no real positive influence for the declining gold price, meaning dollar's going higher, therefore gold's going lower. We don't have that. Okay? So, therefore you would think, okay, this is going to be a one-day sell-off and then it's going to be over. And that's fair to think that way, but I'll caution you because we have now warning signs in the charts, as you can see here. If you take a look, we touched the all-time high, now we're going down. There's the risk of a double top. Do I think we will have a double top? I do not. But there's the risk for it, right? This is a big nasty red candle, powerful candle that's coming down. The next support is this old resistance zone that we broke through, that we're testing it from the top. Makes absolute sense, complete health, very healthy. And the RSI, we're just triggering a sell signal, right? So that's why I personally took some gold profits in the gold price today and in my gold position today earlier, because I don't want to be exposed to the risk of a double top and a massive correction, which again, no fundamental reasons if that happens. It's all deleveraging, which that always happens when you're going to have a crash, when you're going to have a flash crash. Whatever has done well is going to get sold off, even if it does fundamentally correlated, right? That's where you see a lot of the ags down today. That makes no sense. Why are the ags down? What do they have to do with AI? Well, they were doing well. So now people are forced to sell them to cover their margin calls in the high-tech space. Now, I still think that the max downside potential for gold is the lower end of the upwards channel. You're familiar with the channel. You know how great it has been. Held here, a couple of bear traps, but it has been perfect. And that should be, in my opinion, the max risk. Why is that? Because we not only have the lower end of the channel, green line right here, and this yellow support zone, we also have the 50-day moving average and the 100-day moving average. Both of them right below each other, perfect the way it should be, moving up. So we're going to have 4 factors of support for gold in this region, which is massive for a sell-off that, again, has no fundamental reason. Now, therefore, I don't think we're going to have a double top horror breakdown in gold like some of the gold bears are calling out. I don't see that at all. I see right now a healthy correction. But by taking some profits, I'm protecting myself. Remember, I can always buy back the long position. I can do it right now if I want to. By selling it, that doesn't mean that I can never buy it back again. So I'm pretty sure, nothing is 100% sure, obviously, but the retest is the obvious first destination. Then we'll see how gold behaves here. If it goes down, this is the level. Again, 4-way support. Massive, massive, massive. That rarely happens. So that is the area where you want to start accumulating gold. If you are not invested or if you're interested in expanding your position, and that's, for example, where I might buy back some of my gold if we get down there. Yes, it would be a great trade for me, but again, that's not the point. The point is, by taking some profits, and I'm holding my core position, because I believe that we're going to go up in gold significantly, I'm reducing my risk to a potential development, right? If we are looking at the markets, especially as swing traders, and let's not make any mistakes about it, this is barely a swing trade, right? But it's probabilities that let us define how we're going to handle it. There's a probability for a double top. I don't think it's very high, but there's a probability. By taking some risk off through selling it, that way I am honoring this probability, this risk, and I also would make money if the correction continues, which it looks like right now. So again, what's the overall situation in gold? We're looking good. This is normal. This is healthy. The uptrend is here. It's intact, as you can see. The direction is up. Nothing has changed, right? Nothing has changed. It would have been perfect to make a new all-time high, but as I told you before last week, if you watched my video, I told you we have a double resistance zone here with the all-time high and the midpoint of the uptrend channel, which is usually an area where gold tends to move in the other direction. Look here, we hit it, correction, hit it, correction. Then we moved above it. Yeah, tested from the top, went back up. Then we broke it again, down. So you can see the break of the mid section of the uptrend is significant for gold, because here, look at this. We tested here, Bull trap, went right back down. Tested here, couldn't get it through it, went right back down. So now we're testing it again. Going down? Probably, right? But this doesn't change anything as far as the overall direction of gold. So don't panic. See the possibilities that are developing through this crazy DeepSeek sell-off. Talk to you later. Bye-bye.